been beating the drum for the last 7 months that the deliveries into Comex are unlike anything we've ever seen. In terms of gold, we've become a net importer. We've always been importing silver since we wasted all of ours and lost our strategic stockpile years ago. We have to import for manufacturing. But as it pertains to gold, most of my 36-year career, we've been net exporters. We have been a net importer since November. And I don't think there's any coincidence to the election and the understanding by the current administration that by letting the rest of the world drain the world's exchanges of the critical commodities, where the folks in Canada are saying, no, silver isn't industrial, it's strategic. And I agree, it is strategic. That these players, these countries like China, Saudi Arabia, India, Russia, and the like, are now sophisticated, coordinated, motivated, and wealthy, and they are using the delivery option against us and have been for a long time. And it's like all of a sudden, there are people in this administration who have gotten wise to this. And we've seen a constant inflow of metal, both gold and silver and platinum, into the COMEX. A lot of it is leaving. And that's one of the things I want to talk about. A lot of times when we talk about deliveries into COMEX, people say, yeah, but it isn't leaving. A lot of it is. So let me start by saying most of my career, Ivan, I would say to people, less than 1% of contracts ever stand for delivery. And when I'm telling you the amount of gold coming into the country is unusual, we're talking by magnitudes of 100 unusual. I mean,
Wow.
ridiculously unusual, where you're seeing record-setting amounts coming in every single month, month after month after month after month, to the tune of north of $100 billion worth since November that we know of. Now, my guess is a lot of metal is coming in through proxy banks like Citi and Goldman and JP that are coming in to private vaulting systems outside the purview of the COMEX. But let's just focus on COMEX for a moment. The first 3 days of the August contract, just the first 3 days of this month's contract, we saw 20,160 contracts post. Now, I used to say less than 1% of those contracts would stand for delivery.
Right.
Ever. 100% of the 20,160 gold contracts, 100% of them stood for delivery. That's
Really?
2,160,000 ounces. Now, you're talking $7 billion worth of gold in 3 days stood for delivery, and almost all of it left the COMEX. So, excuse me, I was doing a little research, and there's a guy on Twitter I want to give a shout out to, PM Bug, as in Precious Metals Bug. And he says, I looked at the totals for the COMEX daily silver stock reports for the last few days. You can see the received and withdrawn numbers here.
Right.
Now, he starts on August 1st, which was a Friday, then August 4th, 5th, 6th, and 7th. The first 5 days of the August contract for silver, we saw 1,721,192 ounces stand for delivery,
Wow.
post for delivery inside the COMEX ecosystem. Delivered 1,721,192 ounces. From that, 1,890,316 ounces were withdrawn. More silver was withdrawn from the COMEX market in 5 days than was delivered. Almost 2 million ounces. Now ask yourself this, Ivan. 2 million ounces of silver is not something you can put in a knapsack and scurry on off. You're talking several semi trucks worth. Who's taking it? Where's it going? But this is a pattern that we have been seeing in both gold and silver, literally month over month over month over month. And the interesting thing is, not only do we have zero idea who's taking it,
Right.
but there's zero commentary about it on anything mainstream. You would think something as significant as the United States, for the first time since World War II, when World War II ended, we took everyone's gold. It was part of the Bretton Woods Agreement. You give us our gold, your gold, we'll hold it for you safely, and you can, at any time you'd like, exchange it into get your gold back by giving us $35. So, in essence, we held people's gold. We would say, listen, you've been in 2 world wars, give us your gold, we'll pay you $35 for it. You can invest it back into treasuries. Not only will you not have to hold your gold, but you'll earn a yield on it. And anytime you want it back, we'll pay you $35, or you'll pay us $35. We'll give you back that ounce. So everyone sent us their gold after World War II. It's the most gold coming in this country and being delivered into the COMEX ecosystem since the end of World War II. But what's really crazy about all of this, to me, is the fact that all of this metal, lots of it, is leaving the COMEX and is
Right.
leaving it for greener pastures. And when you understand that once it leaves the ecosystem, it ain't coming back. Give you another little story about that. I have a client. We have 9 Brinks vaults around North America in our Brinks storage program. One of them is a COMEX vault that's Brinks JFK,
Okay.
and the rest of them are not COMEX vaults. So I had a client who bought a whole bunch of 1,000 ounce bars, and I call a guy that I know in the industry, and he gets things directly from the Royal Canadian Mint, and he says, "Listen, I have all that you need in 1,000 ounce bars held at JFK." I said, "Listen, she really wants to keep it in Salt Lake City. She doesn't want it in New York City." He says, "I wouldn't advise that." I'm like, "Well, why?"
Right.
He's like, "Well, because once it leaves the COMEX ecosystem, and by the way, those bars that are in the vault there are eligible. Registered are the bars that are backing the contracts for delivery. So all the people that have metal in a COMEX facility like Brinks JFK or like CNT in Bridgewater, Massachusetts, or Delaware Depository, these are all COMEX vaults. These people have no intention of ever selling the metal, but it is eligible. It is eligible in the respect that it is in the ecosystem. It has been cataloged by purity, by serial number, by weight, and if they want to register it for open delivery, if anyone wants to, against those contracts, they can. So, in other words, the eligible metal, most of the people holding it have no intention of ever selling it.
Right.
In any case, so that would have been eligible. So the guy says to me, "Listen, you're talking a couple $1 billion worth, and if you move it to bring Salt Lake City, it'll be outside the COMEX ecosystem. It'll have to be reassayed to come back in." I'm like, "Well, that's stupid as hell, man." I'm like, bro, it's going from Brinks JFK, which is COMEX, by Brinks truck to Brinks Salt Lake City. No one's ever touching it but Brinks. Why would that have to be reassayed? Doesn't
Right.
matter, he says, because once it leaves the ecosystem, it has to be drilled and assayed. Now, think about that when you're talking 2 million ounces in 1,000 ounce bars,
Right.
right? So you're talking 2,000 bars that would have to be reassayed in order to get back in. This is costly, it takes time. They're never coming back. So when you see all this gold and silver withdrawn from the COMEX ecosystem, it is far more bullish in the respect that whoever is taking possession of it has no intention of ever letting it back into the ecosystem to continue to perpetrate this facade of short selling and of the reality that no one ever stands for delivery. The way, like Jim Sinclair said, to beat the suppression is to stand for delivery. No one ever does that. But there are entities now that are, whether it be the countries, the BRICS countries, Russia and Saudi Arabia and China and India, and all of these countries through sovereign wealth funds are standing for delivery. But so too are some very sophisticated players in the United States. And I would say at the level where people between gold and silver in the first 5 days, five, excuse me, $15 billion worth of gold and silver were delivered in the first 5 days of the August contract, and much of it
Wow.
left. These people are wealthy enough to be very well informed. And so it's not just the wealth that these people have. At that level, when you're talking billions of dollars, you're hanging with people that are giving you the inside scoop. So they're well informed. These are the most well funded and well informed traders on the globe who have spent north of 100 billion that we know of in bringing metal in, a lot of it leaving now. Who the hell are they? And why is it so important for them to remove the counterparty liability of leaving it in the ecosystem? All of these things betray the suppression of the paper price, which is the ultimate tool of misdirection. Nothing to see here. Silver's not doing what you think it should. Keep on moving. This has allowed the military industrial complex and other players, the 8 Western banks, to suppress the shit out of the price of silver for a long time so they can build high-tech weapons, blow up places like the Ukraine. And BlackRock just happens to be the primary custodian of SLV at the same time with JP Morgan. At the same time, they own the majority of the weapons manufacturers. They are the military industrial complex. So they blow up places like the Ukraine after funding all of the or funding in the form of weapons to perpetrate to perpetuate the war. And then when the country needs to be rebuilt, guess who gets the reconstruction contracts?
Yeah.
It's BlackRock. This
Yeah.
is a game that's way, way deeper than all of us silver and gold bugs actually understand, but it's being exposed through the delivery mechanism. And
Yeah.
being naked short right now in this environment, Ivan, is as stupid as a mud wall in a rainstorm, and it ain't going to last long. So we're getting close to that moment where once it busts through 40, you know, between 40 and 50, you have very little resistance. I mean, in total, in between 1980 and 2011, it was north of 40 for a couple of days. That is not resistance. That is just stopping points along the way. So in theory, once it gets through 40, 41, 42, really you could see a blow through 50 and then some very quickly, just because there's nothing standing in its way. It's kind of like gold, which continually tried to break through 2,300 and kept breaking, hitting it, coming down, getting above it, coming down. But once it finally broke free, it was off to the races to where we are now. It touched 3,500. We're at 3,350 and climbing back up. The technical chart looks identical to gold about 6, 8 months or a year ago. Silver does right now. So yeah, I expect big things for silver coming up.